some governments at times have tried to make the price of gold and silver go down. I own gold, I own silver, buy low, sell high. That gold and silver will get very cheap sometimes.
We've gone from a decade of near zero interest rates to persistent inflation and much higher borrowing costs. Is this a temporary adjustment, or has the investment landscape fundamentally changed for the next decade?
It's remarkable. Nearly every stock market in the world has recently made all-time highs. I don't remember any time in my life when every market was making all-time highs at the same time.
How do you view the global stock market over the next, let's say, 12 months? Do you think that the AI-driven rally and abundant liquidity can continue, or we are approaching the kind of euphoric phase that typically ends with a sharp correction?
The United States is the largest debtor nation in the history of the world. No nation in world history has ever been so much in debt.
Do you think it's the right time to stack cash? Jim, before we start this interview, I saw a news where Fort Knox gold has been confirmed. Treasury Secretary Scott Bessent says that all U.S. gold is present and accounted for. That's over 1 trillion in gold. Do you believe that? That's my question.
Well, Scott Bessent is an intelligent person. He now works for the government. So you have to remember that when smart people work for the government, they have different views. They have to have different views. As I say, Scott is a smart person, but that does not mean that everything is all right in Washington. I repeat, the U.S. is the largest debtor nation in world history, and the debt's getting worse. Whenever this has happened in the past, it has led to problems. I know it will lead to problems again. I don't know when. Scott would tell you, don't worry, don't worry. I repeat, Scott's a smart guy, but I worry.
Okay. Let's touch on the central banks. The topic is always central banks buying gold, but let's touch on the other side of the story. If a major holder such as Russia or any other country facing severe fiscal pressure were forced to liquidate a significant portion of its gold reserves, would that simply create a buying opportunity, or could it fundamentally alter gold long-term outlook?
Well, if what you just described happens, it's going to lead to dislocations in the market. If major countries start liquidating their holdings, it causes problems. It causes dislocations. Now, if you're clever and knowledgeable, you will find an opportunity. But that doesn't happen overnight. That takes a long time usually. But yes, if you have everybody changing and saying we must liquidate, that leads to opportunities.
Official reassurance often arrives precisely when long-term fiscal vulnerabilities become hardest to dismiss. This is where Jim Rogers' thesis shifts from personalities to structural risk, arguing that debt dynamics ultimately outweigh comforting government statements. Forced sovereign gold sales could temporarily pressure prices, while simultaneously exposing deeper financial instability beneath the surface. Patient investors prepare for volatility instead of fearing it. Next, Jim Rogers reveals why market dislocations often create the strongest long-term opportunities in precious metals.
Just be careful, because the first month is not going to be fun.
Yeah. Gold is in a correction territory. It has corrected. Do you see more pain ahead, or do you see a strong upside from here?
Well, I own gold, I own silver. I have for many years. I suggest that everyone should own some gold. Everyone should own some silver, because throughout history, gold and silver have been valuable and been protection. I mean, Jesus Christ was sold for 30 pieces of silver. And that was more than hundreds of years ago. Silver and gold have always been useful and practical and protective. They will be again. Everybody should have some gold in the closet. Everybody should have some silver under the bed. You need it. And when you need it, it's very late. It's too late to buy. You need to buy it when nobody cares.
So as a gold holder, you basically don't care if the price goes down or up, right?
Well, for me, I don't. I just own it. If it goes up, I don't sell it. If it goes down, I hope I'm smart enough to buy more.
Fair enough. Let's touch on
Now, I will just repeat to them. There are many people who are good traders, good market timers, and they can buy and sell gold and silver in the market and make fortunes. I am not one of those people. I don't even try.
Understood. Let's touch on silver. You mentioned silver. For years, some investors have argued that silver prices have been artificially suppressed.
Price corrections often discourage retail buyers precisely when long-term conviction should be strongest. Jim Rogers notes that precious metals function as financial insurance, rather than short-term trading vehicles, a distinction many investors overlook. Institutions frequently separate wealth preservation from speculation, while retail investors mistakenly combine the two. Owning protection before panic arrives is usually far cheaper than chasing it afterward. Next, Jim Rogers exposes the decades-old debate surrounding silver's pricing and paper market influence.
Through the paper futures market, do you think there's any merit to those claims?
No. I do know that there have been times when it appears that governments are artificially trying to suppress gold or silver, and they have been. I mean, some governments at times have tried to make the price of gold and silver go down. But I know that history shows that in the end, markets are smarter than governments. There's no government in history that's been smarter than the markets. I mean, governments don't like that, but markets have always been smarter than any government you name.
Okay, so in the
always will be.
Yeah, in majority of cases, you believe that the market simply is reflecting supply and demand here.
In the end, yes. Whether we like it or not, nobody has changed the laws of supply and demand, and no one ever will.
Yeah, if the confidence in paper markets were ever seriously challenged, could silver react very differently from gold?
Well, yes and no. There is a theory, I think it started in the Bible or somewhere, that gold should be 16 times the price of silver. And that has often happened. But there is nothing, I do not know any rule that has always been true, except buy low, sell high. I mean, that gold and silver will get very cheap sometimes and get very expensive sometimes. But I repeat to you, for me, I just own the stuff. I don't try to trade it. I don't try to market time it. But I know people who are extremely good at it and make a lot of money trading gold and silver. Yeah. I am not one of them.
Markets ultimately overpower political intervention, even when governments temporarily distort prices or sentiment. According to Jim Rogers, supply and demand remain the final authority, despite recurring accusations of manipulation across precious metals markets. Investors focusing exclusively on conspiracy theories risk overlooking the genuine structural forces driving long-term value. Durable wealth comes from understanding incentives rather than reacting to every headline. Next, Jim Rogers reveals why silver could behave unexpectedly if confidence in paper markets begins breaking down.
My view is I just own it. It's in the closet. It's under the bed. I'm not trying to buy and sell and trade gold or silver.
Got it. Okay. You are bullish on gold, silver. You are bearish on the general markets heading. I get that. But what else? What other asset classes do you prefer at this moment that you are most bullish on beside gold and silver?
Well, I mean, there are not many. If you look around the world, it's remarkable. Nearly every stock market in the world has recently made all-time highs. I don't remember any time in my life when every market was making all-time highs at the same time. I do know that when it has happened, you can read about it. It's been a time to ask questions and be worried. I mean, I repeat, we're all human beings. The whole world cannot be perfect at the same time. It never has been, and I'm sure it never will be. So I would suggest that people ask questions and maybe worry.
Mm-hmm. Is it a good time to stack more cash to maybe take the opportunity of buying, let's say, if we see a correction or a crash, to buy some asset classes? Do you think it's a right time to stack cash?
I repeat, I am bad at market timing, but at the moment I have a lot of cash because I expect opportunities like that to come again.
Mm-hmm. Mm-hmm.
But I'm bad at market timing.
Understood.
When every market appears healthy simultaneously, disciplined investors should become more selective, not more aggressive. What Jim Rogers is highlighting is that holding cash can be a strategic position when widespread optimism leaves little margin for error. Liquidity preserves flexibility, allowing investors to respond when valuations finally reconnect with fundamentals. Patience often compounds wealth more effectively than relentless activity.
How do you view global stock market over the next, let's say, 12 months? Do you think that the AI-driven rally and abundant liquidity can continue, or we are approaching the kind of euphoric phase that typically ends with a sharp correction?
Well, Lucio, how do I know? I'm not very good at market timing. I will tell you, though, that I have sold nearly everything in the world because I know that nearly all stock markets are making all-time highs. Historically, when that has happened, it's a time to worry. So I worry. I sold. I sold too soon, obviously, but I'm watching and worrying.
So you are worried about the direction of the general markets going forward, right?
Well, Lucio, nearly every market in the world is making all-time highs. I repeat, nearly every stock market in the world is making all-time highs. That does not happen very often. And when it does happen, people should ask questions and maybe should be worried. So I'm worried.
Yeah.
I am obviously early, but I am worried.
Agreed on that. Everyone is talking about the AI today. Do you see today's enthusiasm as a genuine technological revolution with decades of upside, or is it becoming another liquidity-driven bubble?
Well, we've had markets throughout, for a long time, and we've often had some markets that become extremely excited, whether it's electricity or automobiles or computers or whatever.
Markets keep celebrating, yet history rarely rewards investors when almost every major index reaches records together. As Jim Rogers points out here, synchronized all-time highs are statistically unusual and deserve scrutiny, not applause. Liquidity can inflate optimism far longer than fundamentals justify, but valuation extremes eventually force reality back into prices. Protecting capital often matters more than chasing the final surge. Next, Jim Rogers exposes why today's AI enthusiasm resembles previous market manias more than investors realize.
At the moment, everyone is excited about AI, and AI is changing the world, just as electricity exchange changed the world. Will it last forever? None of them ever I mean, electricity had lasted forever, but not as a stock market boom. So we've all seen this before. Do not ask me about market timing because I'm not very good at it, but I know this has happened before. I know it's been very exciting when it happens, but I know it's always ended badly.
It did, unfortunately. Jim, you've always been a contrarian investor. Where do you think the biggest disconnect between the market prices and economic reality exists today?
Well, I guess I would say in stock markets around the world. I repeat, many stock markets in the world are making all-time highs. That's a disconnect. Rarely in human history has every market in the world made an all-time high. And when it does happen, it's a time to ask questions. Is that a disconnect? I don't know. You can ask me in 2 or 3 years.
Yeah, but on the other hand, where do you see the disconnect, let's say, on the underpriced commodities at the moment?
Well, most commodities are doing well. I guess agriculture is probably a place that people could look. Agriculture is not booming. I mean, I don't think you know many people who are rushing off to be a farmer right now. People who are in universities are all begging to be farmers. They're all begging to be stockbrokers. So I guess that those parts of the world are places where one could look.
Everyone celebrates technological revolutions, but speculative leadership has repeatedly collapsed before delivering lasting prosperity. According to Jim Rogers, transformative innovations and profitable stock booms rarely peak at the same moment. Wall Street sells the future while quietly ignoring sectors with depressed capital flows, creating opportunities where public excitement barely exists. Investors chasing headlines often overlook the assets institutions accumulate after enthusiasm fades. Next, Jim Rogers reveals why neglected agriculture could outperform today's celebrated market leaders.
Yeah, let's touch a bit on inflation and the monetary system. We've gone from a decade of near zero interest rates to persistent inflation and much higher borrowing costs. Is this a temporary adjustment, or has the investment landscape fundamentally changed for the next decade?
Fundamental change for the next decade? I doubt it. There's been very few things in world history or in investing history that have been a fundamental change for a decade. Yes, some things have been. Electricity, automobiles, things like that came along. But even those things did not last forever. I mean, electricity boomed, but it was not something that made fortunes for people for years, unless they happened to find a good company and bought it and held it for a long time. Likewise with automobiles. I mean, Ford Motor Company is still alive, but it wasn't a great stock forever. You have to get your timing right.
Yes. Jim, do you think we will return to pre-COVID, pre-pandemic levels with inflation? Can we see those numbers again soon or ever?
Well, of course we can. I've read enough market history to know that most of these things have happened before, and I know that they will happen again. So if you say ever, yes, I can tell you yes. The answer is yes.
Okay.
Will it happen today? Probably not, but it will happen ever.
Yeah, I may be over. Your point. You're definitely right here. For decades, the global economy has revolved around the dollar-centric monetary system.
The biggest investment mistakes usually begin when investors believe this cycle is fundamentally different from every previous one. What Jim Rogers is highlighting is that history favors recurring patterns over permanent regime changes. Inflation, rates, and market leadership have repeatedly reversed despite widespread confidence that conditions had permanently shifted. Investors who anchor expectations to today's environment risk missing the next transition entirely. Next, Jim Rogers unravels why the dollar's dominance faces a challenge few policymakers openly acknowledge.
Are we witnessing the beginning of the new monetary order, or is the talk of de-dollarization still premature?
Well, I own U.S. dollars. Partly because I'm an American, but I would own U.S. dollars anyway. The U.S. dollar is the world's main currency. That is going to change. I don't know what's coming next, and I don't know when. But I know that throughout history, we've had different currencies, different countries, different whatever, and I know that that will change again. The United States is the largest debtor nation in the history of the world. No nation in world history has ever been so much in debt, and the debt's getting bigger. I know that will change. I don't particularly like it since I'm an American, but I know it's happening. I know it will happen.
Yeah, the governments continue to accumulate record levels of debt, yet market seems remarkably relaxed. What do investors understand that you don't? Or is the market simply ignoring the risk? What do you think?
My answer to you would be that the market is probably ignoring the risk, but who knows? I would just will repeat, this sort of thing has happened several times in history, in many countries. It's not the first time. It's happened before. We're all human beings. Human beings love easy answers. Human beings want everything to be easy and right. Human beings also make many mistakes.
Governments continue borrowing at record levels while markets price debt as though fiscal limits no longer exist. Jim Rogers' argument suggests investors should watch sovereign balance sheets instead of political reassurances, because debt compounds regardless of public optimism. History shows reserve currencies eventually face credibility tests when obligations outgrow confidence. Wealth preservation begins by recognizing risks before consensus finally notices them. Next, Jim Rogers exposes the contradiction between official confidence and growing concerns surrounding America's gold reserves.